Okay, once again, good morning, everyone. If I'm being very honest with you, having to say good morning every time I start a video and stop a video it's quite kind of tiring. I mean, usually been 2 3 minutes. But service is very important. Service is all too important. All too important. All too important. You must be cordial. You must be nice. You must be decent. You must have a pleasing personality at every moment, at every minute, and at all times. Okay, so where were we? We've identified our zones on the weekly time frame as well as our zones on the daily time frame. We've also drawn our trend lines on the weekly and daily time frame. So what next to do is to identify our trend origin and then mark out our market structure. Okay, so I can actually see two trend origins. Let me explain what I mean. I can see a wider trend origin, something like this: impulsive, correctional, impulsive, correctional, impulsive, correctional. So we're expecting again impulsive. And then I can also see a smaller impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive. But this smaller market structure has already been broken. And what does that tell us? That means that price has switched from the correctional phase, that means that price has switched from the impulsive phase to the correctional phase, because this entire, let me make it blue to differentiate. This entire blue line, this entire set of blue lines represents this one single impulsive move. So a break of structure on this represents that the impulsive move has ended and the correctional move has begun. So in order for us to know that the correctional move has ended and the impulsive move has begun, we would like to see something like a break of structure for this. So let's delete this blue line, and then we have something, let me make it a red line. We have something kind of like this for our bearish structure. We have something kind of like this for our bearish market structure representing the correctional move. And this has actually been broken. So we should be quite confident that the impulsive move has begun. Anyways, let's mark out our swing highs and our swing lows. And then we'll do some real price study. Oh my god, oh my god, oh my god. I just neglected to do something. Before we do this, typically we identify our trend origin. In fact, not typically, always we identify our trend origin. Let's go a little bit further back. Let's go a little bit further back. Let's go a little bit further back. So, what do you notice? Price has been in an upward trend since what? Since the year, this 2020. Yeah, since 2020. And we cannot go all the way back to 2020 to be trying to draw our trend origin from there. So we have to find the closest equivalent. So we can see something like this. You can see that there was a strong bullish move here, then it came down, ended. You can see a strong bullish move here, then it came down, ended. Then we cannot see a strong bullish move like this. So we might call this is now the market structure on probably, let's say, the weekly time frame, considering how much we've shrunk our charts. On the daily time frame, but we've shrunk it so much that this is essentially market structure on the weekly time frame. But come on, who wants to be doing analysis of market structure on the weekly time frame? But you essentially understand what I'm getting at. This is our trend origin, at least as far as concerns the daily time frame. Even if you don't want to call it our trend origin, it's at least the equivalent. It's at least our trend origin equivalent on daily. So that's enough for that. Let's look it. So what we should actually be drawing should be an impulsive like this, correctional, impulsive, correctional, impulsive, correctional, impulsive, correctional, and impulsive. Let's make it black or blue to represent an upward trend. Price came to the exact same low twice. And then this is our current low, but it's not yet confirmed. Okay, so now let's draw this. So this is our swing high or higher high in uptrend language. And this is our higher low. Price maintained this low twice. It's a little bit. Price maintained this low twice. Oh man. I think I need to reduce the sensitivity of my mouse. Anyways, it's my higher high. This is another higher high. We have a higher low here. We have a higher high here. Then we have a higher low here. But this higher low here is unconfirmed. unconfirmed. Do not forget that it's unconfirmed. That means that if price were to come back down and go lower than this higher low that we have here, it does not represent a change in the market's trend from a bullish to a bearish trend, because it's not confirmed. It has to be a confirmed trend, and in order for it to be confirmed, price has to move up and break what is now our current all-time high. So let's now delete this. Okay, so that's it for top to bottom analysis. Okay, no, sorry, oh my god, that's not it for top to bottom analysis, but that's it for our trend origin and market structure. So we've identified our trend origin, we've now identified our market structure. So the next thing for us to do is to do some real price analysis, so some real price study, and that will be for the next video.